Rohr here with an early global view on Thursday, August 28th, 2014. It's currently 7 a.m. U.S. Central Time, and along with any of the macro factors, we are looking at the incursion of Russian troops into Ukraine as a depressing factor for the equities at this point. We'll be getting back to that shortly. So what does all this mean to the markets? Well, it means, especially on that geopolitical influence, that the markets right now are less concerned about rearview mirror economic data and more concerned about the way forward, especially how the current problems in Ukraine and Russia, along with other geopolitical problems, are going to impact the economies in Europe. And for right now, what we have is an S&P 500 that's down 6 at around 1991 after having traded down to the 1987 area. And of course, that brings into sharp focus both the overrun minor downside breakout from last Friday, that's right around 1990, before the market gapped up again on Monday, and secondly, this significant overall upward channel from the lows back in the early part of this month on that sharp reaction down to the 1900 area. And initially today, that's around the 1987-88 area, but interestingly, by later on today, that's up to around 1991. So this area of this false down break through the minor channel from last Friday is going to remain important. But even if that breaks, you've got previous support down around the old trading high in the 1985.5 area and more extended congestion back down into 1975 to 78 that is now also the important Fibonacci 25% retracement of that entire move up from that last pullback low at 1900. So it's going to be very interesting even if we break down out of this channel. Resistance for this week remains up at about the 2010 area, with it moving up another $5 or so in the next week to about 2015 if the rally should maintain and want to try and extend in the next week. But we are pretty concerned about the geopolitical aspect because of its ability to affect future expectations and confidence.